and welcome to the Dirty Money Files. I'm your host, Alex, and a quick word if you're new here. I work in financial crime, and this is a podcast where I take real cases, laundering scandal, fraud, collapsed bank, haste, sometimes killing where money was the reason, and I walk you through what actually happened and how the people whose jobs was to stop it missed it. So today I want to tell you about a bank that died in about a week. Not a small bank, the third biggest bank in Latvia. 25 years old, 3 billion euros of other people's money sitting inside it. Gone. Functionally gone. In something like 11 days. And here is the bit I keep getting stuck on. The bit that made me want to do a whole episode on it. The thing that killed it wasn't a court. It wasn't a conviction. Nobody stood up in a courtroom and proved anything. What killed it was a document. A single document published by an American agency. One evening, after the banks of the American East Coast had already closed for the day. And the document wasn't even a rule. It was a proposal for a rule. It literally came with a 60-day window for the bank to write back and argue its case. The bank didn't last 6 days, never mind 60. And then, and this is the part that genuinely does my head in, 6 years later, the same American agency quietly withdrew the whole thing, took the document back, and to this day, as I'm recording this, not one single person has been convicted of anything. This is File 1, the bank that died in 7 days, ABLV. Okay, let me back up, because to understand how a piece of paper kills a bank in a week, you have to understand a couple of things first. And I promise they're more interesting than they sound. So, Latvia, tiny country, northeast corner of Europe on the Baltic. Used to be part of the Soviet Union, gets its independence back in 1991 when the whole thing collapsed. And when you're a small country that just come out of the Soviet system, you're sitting on something that is both really valuable and, it turns out, really dangerous. You are the nearest place, geographically, culturally, in terms of language, where somebody in Russia or Ukraine or Belarus can put their money into a bank that answers to European law instead of to Moscow. Think about how attractive that is. If you've got money in the former Soviet Union in the 90s and the 2000s, and you'd quite like that money to be somewhere calmer, somewhere with the EU stamp on it, Latvia is right there. Same time zone, people speak Russian, and it's in Europe. So Latvia leans into it hard. Riga, the capital, becomes this corridor, a place where money from the east walks into the Western financial system through the front door. And the banks that specialized in these had a name. They were called non-resident banks because, and I love this detail, most of the people banking there didn't live in Latvia, didn't work in Latvia, and a lot of them had never set foot in Latvia. At the peak, more than half of every euro sitting in the Latvian banking system belonged to somebody who wasn't Latvian. Half. That's not a banking sector anymore. That's a transit lounge. And the biggest of these, well, one of the biggest, started life in 1993 as this little bank built out of a regional branch in a small town about 90 kilometers outside Riga. A couple of years in, two men take it over as shareholders and run it. Ernest Benries and Oleg Fig. Remember those two names? They matter later. They moved the whole thing to Riga and they point it east. By 2011, it's got the name we are talking about today, ABLV. And I don't want you to picture something dodgy little backstreet operation, because that's not what it was. By 2017, this is the third biggest bank in the country. It had won awards. Euromoney named it the best bank in Latvia. It had an office in Hong Kong, a subsidiary in Luxembourg with a full banking license. And, this is important, since 2014, it was being supervised directly by the European Central Bank, the ECB. That's the top table. This was a serious supervised European financial institution, which makes what happens next even stranger. Right, now I have to explain one thing, and I want to explain it properly because honestly, if you get this one idea, you understand not just this story, but about half of the financial crime stories I could ever tell you. And most people, even smart people, even people who work in finance, have genuinely no idea it works this way. Here it is. A bank in Riga cannot move dollars. It just can't. And nor can any bank outside the United States, because the US dollar, actual dollars, moving between banks, clears through the American banking system. And the American banking system is a closed shop. It's a members club. So picture it. You're a Latvian bank. Your customer wants to send $1 million to a supplier in Dubai. Your customer wants to send $1 million to a supplier in Dubai. You can't just send it. You don't have your hands on the dollar system. What you need is an account at a bank that itself has an account at a bank that is inside the United States. A chain. Your bank to a bigger bank to a bank in New York. That chain has a name. It's called correspondent banking. And it is the actual plumbing of international finance. This is how money physically crosses border. And almost nobody outside the industry knows it even exists. Now, here's why I'm making you sit through this. That chain is the single biggest point of leverage the United States has over the entire global financial system. Think about it. If banks in that chain, one by one, decide we do not want to carry this bank's traffic anymore, then the bank at the end of the chain can touch dollars. And a bank that can move dollars is not really an international bank anymore. It's a building with a nice logo on it. Hold that thought, because it's going to come back and do a lot of damage in about 5 minutes. Okay, so what was ABLV actually doing? Who were these customers? And the answer is, mostly they weren't people. They were companies, shell companies, a lot of them, registered in Cyprus, the Seychelles, Panama, Belize, the British Virgin Islands, the UK even. Companies with nominee directors where the name on the paperwork is not the person who actually owns it. Companies whose real owner is sitting somewhere else entirely out of view. Now, and I want to be fair here, that is not by itself a crime. There are perfectly legitimate reasons to have an offshore company. There are perfectly legitimate reasons for a European bank to serve foreign clients. I don't want to pretend otherwise. But he creates one very specific risk, and anyone who's worked a day in this field can recite it in their sleep. When your customer is a shell company, a piece of paper with a nominee on it, the only thing standing between the bank and a criminal is the quality of the bank's own homework, its own due diligence. That's it. That's the whole defense. Because nobody else is looking. There's no other check downstream. If the bank doesn't work out who really owns that company and where the money really came from, then nobody ever does. The bank isn't a line of defense. It's the line of defense. And that's the whole game. Everything else, every form, every regulation, it all rests on that one assumption, that somebody inside the bank is actually trying to find the problem. Sit with that, because we are going to come back right. So, the 13th of February 2018, an arm of the US Treasury called FinCEN, the Financial Crimes Enforcement Network. They are basically the financial intelligence people. They published their finding on ABLV. And I have to be really precise about what this document legally was, because it matters enormously to how the story ends. It was a finding, plus what's called a notice of proposed rulemaking. In plain English, a proposal. FinCEN is saying, we've concluded this bank is an institution of primary money laundering concern, and we are proposing to cut it off from the American banking system. Anyone want to comment? You've got 60 days. Nobody had been to court. Nobody had been convicted. Nothing had been proven to any standard in any forum. This was a regulator publishing its conclusions and opening the floor. But, my God, what is sad. FinCEN said ABLV had, and I'm using their framing here, institutionalized money laundering, made it a pillar of the business. And I want you to hear the difference, because as someone who reads these things for a living, this phrasing made me sit up. They are not saying money laundering happened at the bank. Money laundering happens at every bank. That's the sad truth of it. They are saying it was structure, that it was, allegedly, part of the design. They said management let the bank and its staff orchestrate laundering schemes, that the bank went out and actively courted high-risk shell company business, that the controls over those accounts weren't just weak by accident, that they were kept weak on purpose, because proper controls would have got in the way of the money. They alleged the bank had tried to obstruct Latvia's own anti-money laundering enforcement, including, they claimed, through bribery. They said transactions had gone through for parties connected for entities the UN had designated, some of them. And this is the line that makes the headlines, tied to North Korea's ballistic missile program. And they said the bank had helped move the proceeds of enormous corruption, billions, with activity connected to Azerbaijan, Russia, Ukraine, including a role in this notorious theft of about $1 billion out of 3 Moldovan banks. That's a lot. And the bank came out swinging, to be fair to them. ABLV rejected all of it, said the allegations were built on assumptions, on information they weren't even allowed to see. said they were investigating and were happy to cooperate. They hired one of the heaviest law firms in Washington and commissioned a report basically arguing FinCEN hadn't proven its case, hadn't even properly looked at the compliance system the bank had built, and had ignored the improvements they'd made. And you know what? The response got filed in April 2018, which is likely hunting date, because by April, there was no bank left to defend. Let me tell you what happened in between. Friday, the 16th of February, the notice goes into the Federal Register. That's the official publication. And I want to keep hammering this because it's the whole point. The rule does not exist. There is, at this moment, no actual legal ban on dealing with ABLV. The comment period has literally just opened. Strictly, legally, on paper, nothing has changed. And yet, everything has changed. Everything. Because the correspondent banks, the ones carrying ABLV's dollar traffic, the plumbing I made you learn about, they did not read the document as a proposal. They read it as a flare going up, a warning. And honestly, put yourself in their shoes for a second. You're the compliance department at some big international bank. You've just watched the US Treasury publicly name ABLV as a primary money laundering concern. Are you going to be the one who keeps clearing their dollars while this plays out? While it's uncertain? Of course you're not. And the maths of it is brutal. When you actually lay it out, if you stay and FinCEN goes ahead and finalize the rule, you've got a serious, maybe existential problem. If you leave and FinCEN later backs off, you've lost what? A bit of business from a mid-sized Latvian bank. That's it. That's the downside of leaving. That's not a hard decision. That's not even really a decision. So everybody left, quietly, quickly, all at once. Monday, the 19th, Latvia's own regulator, acting on instruction from the European Central Bank, orders ABLV to stop all payments, freezes everything. And just think about what that actually means. Nobody has said this bank is insolvent. Nobody said the loan book is bad. On paper, its capital is fine, but it can't move money. And a bank that can't move money can't let you take your money out. And its depositors, remember, mostly foreign companies, no sentimental attachment to Riga whatsoever, they all try to leave. At the same time, which is, the oldest way in the world for a bank to die. A run. Friday, the 23rd, 10 days after the document, the European Central Bank looks at ABLV and says the words that in European banking law are the trigger, failing or likely to fail. Says it about the Luxembourg arm too. That phrase kicks it up to the body that decides whether a failing bank needs to be rescued, resolved, restructured in the public interest, and they look at ABLV and decide, no, it's not systematically important enough to bother saving. There's no public interest in our rescue. Let it go into ordinary insolvency. Monday, the 26th of February, 13 days after a proposed rule got published in Washington, the shareholders of ABLV meet and they vote to liquidate their own bank, to wind it up themselves. 13 days from we are thinking about a rule to the owners are switching off the lights, and not a single fact proven in a single courtroom the whole way through. Now, the bank didn't just roll over. give them that. ABLV and its owners went to the European courts, challenged the ECB, challenged the resolution decision, argued the whole thing had been unlawful, argued about whether these decisions could have been reviewed, and they lost. The General Court knocked them back, and then in 2021, so did the Court of Justice of the European Union, the top court. The Luxembourg subsidiary hung on a little longer, but was eventually dissolved too. And in July 2018, the ECB formally pulled ABLV's banking license. Officially done. But is a detail I really want to flag because it cuts against the tidy version of this story. In the months after the FinCEN notice, Latvia's own anti-corruption bureau, their equivalent of a serious fraud office, said that it had not found evidence to back up FinCEN's claim that ABLV's management had bribed Latvian officials. So even one of the specific dramatic allegations, the bribery one, Latvia's own investigators couldn't stand it up. I'm not telling you that to say FinCEN was wrong. I'm telling you because it should make you a little bit careful about treating a proposal as if it was a verdict. They are not the same thing. That gap is kind of the whole episode. And then the Latvian criminal code. And then the Latvian criminal side. This took years. In July 2022, 4 years later, prosecutors sent a case to court accusing 8 people of laundering around 2.1 billion euros through ABLV over an 8-year period. 5 of them held senior jobs inside the bank. That includes the former co-owner and chairman. And this is the detail I can't stop thinking about, and I'll come back to it. It includes, according to the reporting, the bank's former compliance director and the former head of its compliance function. The people whose actual job was to stop this. And I have to be really, really clear here, and I'm going to say this more than once. Those are accusations. The trial opened in 2023. As I'm recording this, it has not concluded. Every single one of the accused denies the charges. The former co-owner told the court he thought the whole thing was politically motivated. Nobody in this story, nobody, has been convicted of anything. They are, and all of them, presumed innocent, and that's not me being polite, that's how it actually is. There's a separate case about alleged tax evasion that's also still grinding through the courts, still no verdict. So keep both of those things in your head for once. So keep both of those things in your head at once. Enormous allegations and zero convictions. That tension is not a flaw in the story. It is the story. And then, 2024, something happens that I think about 90% of the world completely missed. FinCEN withdrew their finding. 6.5 years after publishing the document that basically ended the bank, the agency formally took it back. Withdrew the finding that ABLV was a primary money laundering concern and withdrew the proposed rule that wouldn't have carried off from the dollar. The rule that everyone had run away from. They unproposed it. Now, the reasoning was basically the problem's been dealt with, the bank's gone, the ECB pulled the license, it doesn't operate anymore, Latvia's charges to people involved, Latvia's massively reformed its whole anti-money laundering system, and that huge non-resident deposit sector has basically been dismantled. The risk, in their word, had been mitigated. Which is all true. But sit with the shape of it for a second. The rule that killed ABLV was never actually made. And then, years later, it was unmade. And the bank is still dead. You can't withdraw that. So what do I actually take from all of this? Because I've read a lot about this case, and there are three things I keep circling back to. And the first one is the uncomfortable one. The first thing is the designation was the punishment, not the rule. The rule never existed. What actually killed ABLV was a public announcement that a rule was being thought about, plus the completely rational decision of every correspondent bank on earth to step back while it was being thought about. There's this tool, Section 311 of the US Patriot Act, that gives the Treasury a set of measures it can use against a foreign bank. And the heaviest one is cutting off those correspondent accounts, the nuclear option. And here's the thing that gets me. In practice, they didn't need to use it. They just needed to say out loud in public that they were considering it. That was enough. The announcement did the work the rule was for. And that's an enormous amount of power. And it operates completely outside a courtroom. There's no hearing before the announcement. All the process, the comment period, the bank's right to respond, the actual rulemaking, all of that happens after the institution is already dead. ABLV's legal defense got filed in April. The owners had voted to liquidate in February. And look, I genuinely go back and forth on whether that's a good thing or a bad thing, and I think an honest version of these has to hold both. Because you can make a really strong case that this is exactly how it should work, that access to the US dollar is a privilege, not a right, that America is completely entitled to decide who gets to touch its financial system fast and without a lot of ceremony. And when the allegations on the table involve missile financing, you can see why nobody wants to wait 3 years for a tribunal. That argument has real weight. I'm not going to pretend it doesn't. But you can also find it genuinely unsettling that an institution with 3 billion euros of other people's money in it can be effectively destroyed by a proposal. That no court will ever actually test whether the proposal was right, because by the time any court could look at it, there's nothing left to argue about. The bank's already gone. And honestly, I think both of those things are true at the same time. And anyone who tells you it's obviously one or the other is selling you something. That's precisely why the case is worth chewing on rather than just retelling. Second thing, quicker. Correspondent banking is the choke point. Not sanctions lists, not fines, no regulators giving speeches. The thing that actually ends a bank is other banks. Individually, quietly, rationally deciding it's not worth the risk anymore. We call it de-risking. And it's not a decision made in Washington. It's thousands of separate little decisions made in compliance departments by people you will never hear the names of. And it moves faster than any regulator ever could. A regulator has to follow a process. A nervous correspondent bank just leaves on the Monday. And the third thing, this is the one that actually keeps me up a bit. Among the 8 people the Latvian prosecutors charged, allegedly, were the bank's compliance directors and the head of its compliance function. And I need to say it again because I mean it. This is an allegation. It's for a Latvian court to decide, and it hasn't decided. They deny it, presumed innocent. I'm not telling you they did anything. I genuinely am not. But just sit with the simple shape of the allegation for a second, because the prosecution's case, as I understand it from the public record, isn't that the compliance function got overpowered by the business. It's not the usual story where the people trying to do the right thing get shouted down by people bringing them money. The allegation is that the control function was, supposedly, part of the arrangement. And that the shape of that idea is the thing that should genuinely disturb anyone who works in this field. Because think back to what I said right at the start. Every anti-money laundering system in the entire world rests on one single assumption, that somebody inside the institution is actually trying. Every regulator, every reporting rule, every neat little 3 lines of defense diagram anyone has ever drawn on a whiteboard, all of it assumes the compliance function wants to find a problem. And if you take that one assumption away, even just as a hypothetical, even just as a thing that could happen, then none of it works. Not one part of it. The whole edifice is built on trust in the one person standing at the gate. And we mostly just assume that person is going to do their jobs. We have to. There isn't really an alternative. I find generally unsettling. Not because ABLV specifically, again, that's unproven, it's in front of a court, but it's an idea. And things the system quietly depend on, it can't really defend against. So, ABLV dead in about a week. Not because it was insolvent, not because it lost a case, not because anybody proved anything. It died because the United States published a document saying it was thinking about cutting the bank off from the dollar. And the rest of the financial system read the document and quietly took a step back. And then 6 years later, the document got withdrawn. The trials are still ongoing. Nobody's been convicted. And the lesson I keep landing on isn't the system worked. And it isn't the system failed either. It's something narrower and honestly a bit stranger than both. It's that in this world, in international finance, the accusation and the verdict are not the same thing. But sometimes they don't need to be. That's file 01. Closed cases, public record, no speculations, just thinking out loud about the ones that stuck with me. I'm glad you're here. I'll see you in the next file. That's file 01. I'm Alex, your host. Thank you so much for listening. I'm glad you're here, and I'll see you in the next file.